If you're experiencing difficulty making on-time mortgage payments due to this national coronavirus emergency, forbearance may be an option for you. Forbearance can help consumers get back on their feet during the short-term financial difficulty due to this pandemic. But there's a few things you need to know and some very important decisions you'll need to make. And remember, forbearance does not mean forgiveness. Hi, I'm Dave Bulava with the Dave Bulava Group at Keller Williams Premier Properties. Let's first look at what forbearance is so we can better understand what you may be agreeing to. Forbearance is when your mortgage servicer or lender allows you to pause or reduce payments for a limited period of time. Forbearance does not erase what you owe. You'll have to repay any missed or reduced payments in the future. The best thing to do is keep making your mortgage payments if you have the ability to do so. The types of forbearance available vary from loan type: government-backed loans and non-government-backed loans. Loan servicers may have forbearance or deferment options for non-government-backed or private loans, but the exact options available for you may differ. For now, let's discuss government-backed loans and how they pertain to the CARES Act. If your mortgage is backed by the federal government, this includes FHA, VA, USDA, Fannie Mae, and Freddie Mac. Provisions that recently enacted in the CARES Act allow you to temporarily suspend payments, only if you experience financial difficulty due to the impact of the coronavirus on your finances. But you must call your servicer. This is not automatic. This is a key bit of information, so let me repeat it. The CARES Act allows you to temporarily suspend payments if you're experiencing financial difficulty due to the impact of coronavirus on your finances. But you must call your servicer. This is not automatic. Here's how this works for federally backed mortgages under the CARES Act. If you're experiencing financial hardship due to the coronavirus pandemic, you have the right to request a forbearance for up to 180 days. You also have the right to request an extension for up to an additional 180 days. But again, you must contact your loan servicer to request this forbearance. There won't be any additional fees, penalties, or interest added to your account, but your regular interest will still accrue. It's important to find out what options are available to you, and the best place to find this information is from your loan servicer. Look for their contact info on your monthly mortgage statement. If you cannot make your mortgage payments and you are looking to suspend or reduce your payments, you'll need to work with your servicer. If you decide to move forward with a forbearance plan, be sure to ask your servicer how you'll be required to pay this amount back after the forbearance period. So here are some questions that you'll definitely need answers to. Will you owe the entire amount in a lump sum once the pause period has ended, or at the end of the term? Can the loan term be extended so that missed payments are added to the back of your mortgage? Will your subsequent monthly payments be higher for a period of time to make up for the deferred amount? Bottom line is just know what you're getting yourself into before you sign. Speak with the correct people, ask the right questions, and please read the fine print. Remember, forbearance is not forgiveness. There is no free lunch. You still have to pay it back. Whether it's at the end of a few months or if it's at the end of the lifetime of the loan, you'll have to pay it back. You need to make sure that you're getting accurate information regarding forbearance, if that's what you choose to do. Now, if you're considering a forbearance, remember, it can negatively impact any chance of refinancing your home. And with mortgage interest rates as low as they are right now, that might be an option for you as well. A forbearance on your mortgage history is deemed unsatisfactory under the current underwriting and approval guidelines for Fannie Mae and Freddie Mac. Please make sure you understand what you're getting into. It's very similar to 2008 when people were short selling and didn't realize that before the Mortgage Forgiveness Debt Relief Act was passed, they would still be taxed on the difference of what they owed on the home and what they short sold the home for. But unlike the mortgage crisis in 2008, people today have a substantial amount of equity in their homes. Don't allow the media headlines or bad information to cloud your judgment and take you down the wrong path, as well as disqualify you from having the ability to refinance, or worse, cause you to lose your home. Finally, be on the lookout for scams and scammers looking to take advantage of consumers affected by coronavirus. You may receive fraudulent calls, emails, text messages, or other offers to help you reduce or stop your mortgage payments. Make sure you're working directly with your mortgage servicer. Contact them directly. Never respond to an inbound call, email, or text. For more in-depth information, including information on how to find a HUD-approved housing counselor, go to consumerfinance.gov/coronavirus. Bottom line, know what you're agreeing to, and work with very experienced realtor and lender partners who know how to protect you and give you accurate and sound advice. Please feel free to reach out to me directly at 630-529-0022 for any advice at all. I can help you navigate through these tough times and refer you to the appropriate people. Please stay safe and healthy during these stressful times. I'm Dave Bulava with the Dave Bulava Group. Make it a great home selling and buying day.
This is what we do, who we are.